And good afternoon. Welcome into Market Talk on this Monday, March 21st. Great to have you along with us. Thanks for joining us, making us part of your day once again. I am your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web, markettalkag.com. You can find all of our social media links there, the latest streaming links as well, Spotify, Apple Podcasts, and more. Our YouTube channel. Find everything all online, markettalkag.com. Well, we come back from the weekend. We look at what's going on in Russia, Ukraine, amid other news items out there, and we trade sharply higher in the grains today, led by winter wheat. A lot to discuss today in a sharply higher grain market day. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us this afternoon. John, good afternoon to you, sir. And just looking at these markets today, um, we were talking a little bit. This is kind of the new normal: sharply higher, sharply lower. And we find a day where we're only a couple cents one way or the other. That would be a welcome relief. This is just kind of just trading a lot of different things in this market here, and obviously trading a lot of Russia Ukraine news again here today.
Yeah, very much so. Again, just does not look like the conflict's going to come to a pause anytime soon. I know we had that rumor last week that sent the market tumbling, limit down in weed, and we've kind of recovered off of that and added in some nice moves today. I mean, I really like the move in the corn market today in terms of where it went to. Even though we faded off the close a little bit, still a pretty solid move overall. Still a little cautious on beans. Not that I think we're going to go tumbling out of bed, but just the fact we can't get through $17 just makes me kind of go, we just haven't seen a whole lot of business, and we haven't had a good bean sale, at least a noticeable one that's been published in the morning since the 8th of March. And then obviously, again, it's all about that wheat market. What's going to happen with the Ukrainian crop? Still watching the weather forecast in the southern plains. I don't know if some of that rain maybe didn't materialize like they thought it would over the weekend. Those things all come into play. This world global supply situation and demand for grains is still going to stay active, and this volatility is not going anywhere anytime soon. So, producers just need to kind of buckle up and deal with 15, 20, 30 point swings on a daily basis, because that's just how this market's going to trade.
Now, John, staying on that corn market, because I know you mentioned you like what you saw there today. Do you think traders are maybe waking up to the fact that there's just tight global corn supplies amid everything going on with Russia, Ukraine, and maybe some challenges coming up in South America? Do you think traders are just kind of waking up to the fact that we just don't have as much corn as we thought?
That's still probably the case. It's probably still a little undervalued overall. And, the technical move today is pretty good. You go look at December corn, new contract high close. We were consolidating underneath this contract for a handful of days, and we broke out through that today. Same thing on that July contract. We had a nice little downtrend basically since the 1st of March, and we broke through that downtrend line today. So to me, there's some good things there, at least technically, that can push this market higher. We still got that big gap from May at 30 cents over the July that probably needs to narrow up. Plus just where did March get to on its highs, and does May have that in it to go challenge those levels? So to me, overall, the corn market still looks like it's got some room to do some things. Do we go put an 8 on the front month corn? Do we put a 7 on December corn? I still think those opportunities are out there. Might still just take a little bit more money flow to do that. Acre report at the end of the month too, so maybe that's just going to add a little bit of buying spree going into that report, with the anticipation those acre numbers might not be where we need them to be.
What about export inspection numbers here today, John? 57.7 million bushels of corn. What was soybeans? 20 million. Wheat, 12.1 million bushels. What'd you make of those numbers here today?
They still stay very good for corn and beans, especially in this window. And, watching that corn window starting to open up a little bit more as time of the year, we start seeing those corn shipments go out, as well as the sale pace overall is still very, very good, just reflecting what's going on globally in terms of the supply. We've seen a heck of an uptick in soybean sales for old crop beans. Corn's kind of in the same boat now, maybe getting into that window where we see a little bit more push coming the U.S. corn side. Right now we're the only game in town, realistically, when it comes to corn exports. And with even prices at these levels, the demand is going to stay strong, because South America has crop concerns. It's going to take time before we get that second crop in. Plus, we have to see how that develops. Obviously, the Ukraine is still a situation that's missing out on terms of its shipment window. Does Europe have enough in terms of the European Union to absorb that? If they do, where are those other purchasers going to go? They're going to have to come here. So right now, U.S. corn is still the most available, most plentiful, and probably the cheapest corn on the board going into at least the early summer months. And that's going to keep the demand side pretty good. I mean, go look at export sales last week. Again, another strong number, market year high on those corn sales.
Well, John, as well on that soybean side, we mentioned South America, and we have edible oil supplies tightening, South American supplies tightening for beans. I know another drop in U.S. Gulf bids in recent days. We're competitive with Brazilian bids on the soy side, on the bean side. This soybean complex, though, I saw us hit that $17 mark again today on that front month, and then we couldn't get above it. I mean, it just feels like that is one of our overhead resistance areas that we just can't punch through in this soybean complex.
And that's very true. And maybe we set ourselves up with that close still 20 higher today. The last couple of times we poked our head up there, we finished the day at the bottom of the range and we stayed middle of the range today on the close. So maybe there's still a little bit of support in there. But yeah, I agree with you. We've run up that $17 level multiple times. This time we actually kind of broke through it for once and still fell back under, finishing 10 cents, almost 20 cents off the high. So that's still a little discouraging that, hey, that might be a point, where we just can't get through here in this time frame. A couple things you brought up. We haven't seen an export sale announcement on beans since the 8th of March. Also those Brazilian beans are there. You look at a Mato Grosso, 95, 96% completed on harvest, might even be a little bit higher, I believe. Look at some of the other regions down there. The harvest is still going on. You still got 120 million metric tons or so getting harvested. We're not sure where that number is. It's down significantly from where we thought it would be, but that's still a lot of beans that are in those ports, in those, in the cash market. We saw the Brazilian premiums come down a little bit because of that, and that's just weighing on beans. I mean, we still got a window here where global supplies are still fresh, and there's still a lot of beans in them, even though the pile is smaller than we'd like it to be. But it's still enough at this time frame. It wouldn't surprise me if we saw the bean market just hold in here, maybe do a little bit of a break just going into the acre report. We'll just have to watch it regardless. So I still think it's going to become a value if we do see any type of a pullback.
And John, I know news items other than Russia, Ukraine today, Canadian Pacific halting operations in Canada, more supply chain issues. How much do you think that could weigh on these markets? Because obviously, Russia, Ukraine just feels like it's the giant 100-pound weight, and then everything else is just kind of like ancillary news items and factors. But how much do you think Canadian Pacific's lockout, depending on how long it goes, could that weigh on our markets at all?
It's going to cause some issues in the cash market. Obviously, if they don't have hubs to move it on the local level, that's going to probably put pressure on the local level in terms of cash. But some of those bigger regional markets that need those trains rolling in, they're going to be looking for grain to continue to push it to the export front. So that can bring some pull into the market on that side, at least in terms of basis and cash price. What it becomes if this happens to be a longer type of a strike or a holdout, the market's going to have to find a way to readjust to get those bushels moving from A to B. Initially, like I said, if they don't have a window to move those bushels out from the local market, it could come into play. And from what it sounded like, some of the local markets are a little bit messed up given the strength in the grain anyway, in terms of where some of these cash bids are tied to and when they're tied to.
Well, and you think as well, you wonder with Canada trying to up their fertilizer production, how much is that going to weigh in on fertilizers we get into spring planting? I think that's a fair thing to think about and keep in mind as well. And, as we talk spring planting, we're starting to see more planters roll, especially the Southern Plains region. A lot of folks are starting to think about getting into the field. We look at where prices are right now, John. Do you think there's any last minute changes, or do you think we're pretty much going to be set with what we're doing? What are you hearing from farmers out there across the countryside?
Well, again, based on where you are regionally, obviously the core states, the I states, Illinois, Indiana, Iowa, they're going to stay with their rotations. Maybe we see some, border acres moving that were able to be switched around, but it just sounds like, at least from talking to those producers, they're going to stay pretty true to the rotation. It's going to be those outside areas. What's going to happen in the Dakotas, northern Minnesota? What's going to happen in the southern portion of the southeastern United States, where they can make those changes. All comes down to what they got available in front of them in terms of inputs. Both prices are going to be extremely supportive. But again, beans probably still winning that battle, given the fact they're poking at $15 a bushel versus 660 on corn, given that cost of inputs. So I don't think we're going to see a ton of changes past this point. What we see for the numbers coming out at the end of the month will probably be a pretty good baseline, and then we'll have to watch how things come together in planting pace and spring weather, things of that nature, which, from looking at those long range forecasts, looks like we might be getting this crop in the ground fairly quickly, which also could be another factor that, may cool prices for a while. If this market feels like this crop's going to get in and get in quickly, that means a big potential for a decent crop down the road is there, as long as the weather comes together. And that's just a totally different story.
John, let's talk livestock. Hogs today, kind of surprising. Shot out of the gate, shot sharply higher. Very strong day on Monday. What are your thoughts with what we saw there today?
Yeah, we're still looking at slaughter numbers that just aren't there. We're talking about 50 to 60,000 head under last week on total weekly kill. We still have very good strength on the retail side. You got, cash values continuing to climb. In fact, even today with the index now trading at a premium to the April contract, that's kind of supportive. We were breaking back technically after we failed to get through that contract high last week. And so we saw some pushback, and then maybe just the realization that that might be where this market wants to go. So strong recovery day did almost push limit higher on those summer hogs. Again, looks like we're going to go ahead and try to challenge that high again, and that'll turn it into a triple top. And most triple tops don't hold, so it feels like we're at least going to be going through that level and probably higher.
Now, on the flip side, cattle today were weaker. I know we have a cattle on feed report coming up at the end of the week. I mean, though, I guess I wasn't too terribly shocked with cattle moving lower today, in maybe in conjunction with the stock market a little bit. Is that kind of what you thought, or did you see something else there?
I thought cattle was actually fairly resilient, especially feeders today. When you're talking 20 plus higher on corn and the limit higher on wheat, and you saw those feeder cattle markets at least come down, hold some support levels under about what we call 10-day moving average underneath, kind of shook them off. Yeah, we finished middle of the range today in negative, but quietly now, is even with all the volatility, cattle markets worked higher 2 weeks in a row. So we got a little bit of an uptrend there. We'll see where it wants to go. Now, most encouraging thing to me for that live market, look at those retail values today. Another good day in choice carcasses. We were about $3.50 higher last week on choice carcasses. We got some decent weather, gorgeous day here today. So that means the grilling demand might start picking up. Now, can we get the cash trade to come a little bit higher? I think the market's hoping for it. Last week we were basically steady on cash. Maybe dress bids are a little bit firmer. We need some confirmation there to get this market to maybe go ahead and make one more run into the spring window. So that's what I'm looking at. Again, the charts are trying to work themselves higher. We got a lot of resistance here over top. Obviously, concerns regarding the consumer and what can be out there for disposable income. One little correlation I've been kind of watching: what happens with crude oil in relationship to cattle. $6-7 higher on crude today. Typically, it means money supply might tighten up for the consumer because they're going to have to pay for it at the gas pump. It usually means beef misses out, pork and chicken becomes the winner if the money supply is a little tighter. So watch what crude does here. There seems to be a point when crude got very expensive. That's when the cattle market started to really roll over. Just again, worried about that discretionary income that the consumers have.
And crude back up around that 110, 115 range here today. So something to watch there as well after a pretty decent pullback. John, dairy market as well today. More green on the screen, especially in milk. What are you seeing there this as we start this week?
Well, we'll get a milk production report out here this afternoon too. We're expecting to see production to come down a percentage point or so in the month of February. So that'll be something we're going to be watching here as the market closes out today. Again, decent movement in cheese, 4 cents higher barrels, blocks up to 0.75 cents. Butter continues to be multi-year highs. So again, that product is still there on the demand front. So that's just going to keep this milk market supported. We tried to break through some all-time highs here about a week or so ago. We failed at those, making another run at them. So the next couple of days here could be pretty key. Do we get through that 24 to into the 25 barrier on that April and May contracts and go test those all-time highs that came back together, back in 2014 when we took milk up to 26? That might be an area that we'd be looking through here, especially if milk production stays tight and the demand stays strong.
Well, John, we went through a lot there pretty quick today. Any final thoughts you have for us on this Monday?
Again, the volatility isn't going anywhere. It's going to stay like this pretty much through I would assume, the rest of the year. It's just going to be something people have to get used to. It gets a little difficult, but you got to make sure you're assessing your risk on a daily basis. I talked to the guys today again about, do they want to sell some more corn here? Do we hold here? What do we do with beans here? How can we just kind of make sure we're defining the risk overall? And that's some of the strategies that we're working on, making sure we can protect the floor, define the risk to the upside, keeping us in the game as you're dealing with historically high prices. Can we go higher? Yeah, I think we can. But at the same time, we can't be foolish and undisciplined in terms of our marketing strategies.
Well, John, great insight as always. And I know if producers need some advice, they could reach you and the folks there at Total Farm Marketing very easily. What's the best way to do that?
Love chat with them anytime. Feel free to call 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. And again, don't forget about that website, totalfarmmarketing.com. A lot of great information. Sign up for a free trial to our newsletter. A lot of stuff there for producers to take advantage of.
Totalfarmmarketing.com, one of the best ways to reach them. John Heinberg, appreciate the time on this Monday, sir. Enjoy the rest of your week. We'll talk to you next week.
Sounds great. Have a good week.
John Heinberg with Total Farm Marketing, our guest today on Market Talk. That's going to do it for the show on this Monday, March 21st. Find us on markettalkag.com. I'm Jesse Allen. Have a great afternoon.